Alright everyone, welcome back to the channel for another episode on Bitcoin. In today's episode, I'm going to keep it short and sweet. I only want to talk about two things. Number one, we're going to talk about the Bitcoin price drawdowns from the all-time high. We're going to be talking about a trend that I see on this chart. We're going to extrapolate the trend, talk about what you would need to see in this cycle for the trend to remain true, and then we're going to move over to one bit of information that I want to spend a minute or so on, and that is the US dollar denominated realized losses in Bitcoin's history. With that being said, let's jump right into the first chart. Now, this chart, the Bitcoin price drawdown from the all-time high, is very simple to understand. We've got two key bits of information here. The pink lines you will see on the chart are the price drawdowns from the all-time high, and this correlates to the left side of the y-axis where you will see the percent drops from the all-time high. If we look at the right side of the screen, and if we also look at this white line, this is simply the BTC USD chart on a logarithmic growth curve scale from when it initially started trading. And on the right side of the screen, on the y-axis, you will see the US dollar valuation that is correlating to the price line at that moment in time. Now, on the x-axis, as always, as we have with all of our TradingView charts, this is simply the amount of time that has passed when this chart is coming to fruition. Now, let's jump right into this. So, what you'll notice straight away with this chart, or at least in my opinion, what I notice is three major areas of capitulation. Number one, the 2012 mass capitulation. Number two, the 2015 mass capitulation. Number three, the 2018 mass capitulation. And you can also talk about the 2020 mass capitulation. So really four massive data points that we have going from this period in time. Now, what you will notice with this chart is number one, if we look at the first drawdown that Bitcoin witnessed, we had a drop of approximately 92.68%. Now, the reason we're specifically looking at the percent drawdowns instead of the US dollar valuation drawdowns is because I feel like the US dollar valuation drawdowns is kind of arbitrary. For example, in the first cycle when Bitcoin dropped from, approximately $20 or $30, $30 and it moved all the way down to $2, that was a $28 drop. And obviously cycle over cycle over cycle, the market cap of Bitcoin is going to be a lot higher. The price of Bitcoin is going to be a lot higher. So in theory, at some point in time, Bitcoin could be $1 million and it could have a $100,000 drop and it would only represent a 10% drop. So that's why I think the US dollar amount is an arbitrary amount. The percent terms is a much better way of looking at things. So once again, to start with, we've got about a 93% drop in the first cycle. Coming over to the second cycle, we have approximately, if I draw it right down to the bottom, we have approximately an 85% drop. So we've gone from 93 to 85. The next cycle in 2018, we subsequently dropped 82%. So 93, 85, and 82%. Coming into the 2020 pandemic scare, we dropped 73%. So you will notice a general trend that is lining up over in these charts here. They always, they seem to always drop by less of a percent terms time over time over time. And yes, they do drop by a higher US dollar valuation, but that is simply because the price is higher at that moment in time because the market cap is higher, but nonetheless, the percent drawdown is a much better way of looking at what we've got going on right now. So this TradingView chart has not updated. I believe it updates tomorrow. But what we can do is we can go over to TradingView and we can look and we can see. We can say, okay, in the previous massive drawdown from down here, we dropped 73.5%. And the reason why we're not drawing this drawdown is because, this dump here, and then this pump, and then this dump that we're witnessing is all part of the same cycle. So I'm interested in these cyclical drops from the first bear market, second bear market, third bear market, massive black swan pandemic crash, and then this bear market. So like I said, previous cycle, the last one we dropped was 73.5%. And if we come over to what Bitcoin has done so far, we have now subsequently dropped 74.5%, which is just over what we saw in the pandemic scare, which is, quite worrying that we're actually dropping more than we did in the previous cycle. But What if you wanted to draw this from bear market low, bear market low, bear market low, and we weren't going to take into account the pandemic scare? Now, I personally do think the pandemic crash should be taken into account, but, you know, as always, some of these charts are subjective. You know, some of you may disagree with me that you wouldn't encompass this data point. Some of you may agree with me, so I'd like to provide an alternative perspective and talk about what we would have to witness in terms of the bear market lows, because this was not a bear market low. This was a pandemic scare. This was the bear market low back here in 2018. And like I said, we subsequently dropped 83.6% approximately. So if BTC does not drop below, what was it, 85% from this cycle here, rather, we dropped 83.6%. So if we, let's say, drop 83%, then this would mean Bitcoin would be down here at 11,800. So, you know, according to this chart, as long as Bitcoin comes back down to 11,800 and then has a strong bounce, then the cycle bottom over cycle bottom over cycle bottom would have played out nicely. Now, that is basically all I've got for this chart. I would also like to say I do not think that we are going to drop down to 11,800. I would just like to highlight that within this chart, you know, we are already, you know, a very, very decent amount of the way to the downside, and subsequently I do imagine that the bottom is definitely closer than the top. I do not think that we're going to 10,000 or anything near that valuation, but let's jump into the next chart that we've got. Let's read from here. So the last 3 consecutive days have been the largest US dollar denominated realized losses in Bitcoin's history. Over 7.325 billion in BTC losses have been locked in by investors spending coins that were accumulated at higher price targets. Now, if you want the full breakdown of this, then be sure to head over to Glassnode. To make it easy for you, I'm just going to retweet it. So if you do want to head over to my my Twitter at 618_cowboy, because Glassnode does post quite a lot, then you will be able to find that over my profile. But what we see here, very, very simply, is if we look at this massive pink line here, which is basically all we need to worry about, and also on the y-axis you can also see, you know, in terms of the price in US dollars, how much liquidations there's been. You can see this massive, massive spike up, and this is correlating to the past 3 consecutive days having 2.4 billion alone in losses, and this in total is about 7.325 billion. Now, what you will notice with these as well is not every single time, but predominantly these mass liquidations that we saw here, we at least had a bounce from it. This was the bottom, this was the bottom, this was not the bottom, but we at least saw a bounce from it and it was near the bottom. This and this, you know, once again, saw a bounce from it, was not the bottom. This, you saw a bounce from it, it was not the bottom. This liquidation, you saw a bounce from it, but it was not the bottom. And at this moment in time, you know, we're having super spikes taking into new all-time highs in terms of the realized losses. And in my opinion, I'm a contrarian trader. I do not like to do what the average retail trader is doing. In fact, if you are a seasoned veteran to my channel, you will already know that I tell you I do the opposite of what retail traders do. And what do I mean by that? Last year, every single retail trader, everyone and their nan was saying Bitcoin is going to 100,000, and what happened? We didn't go to 100,000. So, you know, subsequently the whole way we were capitulating to the downside, all the retail traders were saying, you know, this is still the same bull run, this is still the same bull run, we're still going to the moon. And if you watch my channel, you can see that I was telling you, look at this is not bullish, we are going lower. I've been telling you that for the past couple of months, and you know, our content has aged beautifully, unlike some other channels that have been shilling that the bottom is in the whole way down. Now, that average retail investor, and I'm seeing it a lot recently, you know, they've gone from saying Bitcoin is going to 100,000, and now they're starting to say Bitcoin's going to 10,000. They're saying Bitcoin's going to 11,000. And I've been surprised how quickly the social metrics have just completely flipped on their head. From the average retail trader that, you know, buys crypto on Coinbase, holds it in their Coinbase account, doesn't know what a hardware wallet is, doesn't understand on-chain metrics and the value proposition of Bitcoin, hasn't read the white paper, but they buy what's trending on Twitter, they buy whatever's pumped up 100%. That's the average retail trader. That is not the smart money or the institutional money. The institutional money does not let you know what they're doing, and if they do and they say this is what we're doing, they're probably doing the opposite to sucker you in to be exit liquidity or something else like that. So I keep my eye on what the whales are doing. I do the opposite of retail traders, and subsequently a lot of retail traders recently have been saying that we are now going to 10k. And because of that, I am now becoming more bullish than I have been in the past couple of months. And I think looking at the Bitcoin realized losses and looking at the price drawdowns that we are currently massively sitting in, because we're in a mass capitulation event right now. And you can also see, if we're just looking at the volume, you know, normally these massive volume weekly candles to the downside, they normally always mark the bottom. This marked the bottom, this marked the bottom, this marked the bottom, and you know, hopefully once again, I do not think the bottom is in yet. I really don't think it is, but I would like to highlight that this is one metric that I will be using to decide whether I will be buying lots of Bitcoin or not. And as of today, I do not think the bottom is in. If you're new to my channel, first of all, warm welcome. But if you're a veteran to my channel, you know that I've had a few different price targets ranging from 18,500, which is the Bitcoin CME gap, the CME futures gap. I've also been looking at 16,500, which is the 300-week moving average, and I have been looking at the Elliott wave from our one wave. So if this market cycle was to remain true, and we are currently in a typical ABC correction for the Elliott waves, then we should bottom above the one wave, and we should bottom above 14,000. This is what I'm looking for. I don't see us going anywhere lower than this. This is my opinion. Hope you enjoyed today's video, short and sweet, but yeah, that's all I've got. There's a lot of on-chain metrics. There's a lot of price data on some great places like Glassnode, which are signaling the bottom is in, or the bottom is closer than we think it is. I don't think the bottom is in, but as I've been saying on my channel, I'm not trying to buy the exact bottom. I'm trying to buy the range that I believe the bottom is in. I think we're going to experience one last capitulation, and then the bottom will be in for Bitcoin. That is all I've got for today. Once again, hope you enjoyed today's content. As always, cowboy out. Peace.